Hello and welcome to Inderes TV. Today I'm here with Analyst Antti Viljakainen to do a short update on Scanfil. Antti, you visited the Scanfil factory in Malmö in Sweden last week, and also Scanfil's biggest customer, Invisio, gave a presentation there about their business. Is there anything specific you would like to point out about Invisio or the visit in itself?
Scanfil has a small factory in Malmö, which came part into Scanfil 2015 when Scanfil acquired Partnertech, a relatively large acquisition. It's like a factory that has been focusing on electronics, PCBA, electronic assembly, and so on. Invisio is most likely the biggest customer of the factory. Invisio is the company that has focused on technology delivered to military segment and other security-related segments like police and firemen, for instance. They have amazing track record from financial perspective. The company has been growing fast with really good profitability, and they have fully outsourced production model, so they don't have any own production, but they are relying only manufacturing services, such as companies like Scanfil in their production, which is of course interesting from Scanfil's point of view.
Would you call Invisio a typical customer for Scanfil, or is it bigger than usual? Or
unfortunately not, because not very many companies are growing that fast. In EMS business, you are as good as your customers are, so it would be very nice to have a lot of companies like that in portfolio that grow very, very fast. And it's not yet mainstream that OEM companies have fully outsourced production model like Invisio has. I think that this fully outsourced model gives some pricing power to manufacturing companies like Scanfil to price a bit higher than in cases when the customer has also an option to use own production assets. I would say that Invisio is in many fronts ideal customer for Scanfil.
Yeah, so a bit of a dream customer there. Scanfil recently also announced that it is restructuring its organization and moving to a region-based organization model starting next year. Your thoughts on that?
Well, I don't think that this is too dramatic change. Actually, relatively many companies in Scanfil's scale are using a regional organization model. It should probably be a bit more scalable if and when Scanfil grows organically or inorganically, to add just new factories within these regions. The flip side of the coin might be that taking care of global key accounts that Scanfil has in its portfolio might be a bit more challenging, as there are some regional interfaces in the organization, but this should be an issue that the company understands and is prepared to fix.
Yeah, so not a major change probably then.
Yes, I think so.
And then Scanfil's peer Note issued a profit warning a few weeks ago, citing a further slowdown in customer demand, and particularly in communications and green tech segments. And Scanfil issued one before Q2. What do you feel about the market now? Are we expecting more profit warnings?
And also Norwegian competitor Kitron announced profit warning few days after announcement, so we have got some recently. Obviously, demand is not still picking up, which maybe some companies have expected to happen in the second half of this year. Given that the recent data from macroeconomics or European industrial sector, this is not dramatic surprise. It has been clear that this pickup has been postponed. Interest rates have been still high, and there is a lot of uncertainty related to economics, and the companies are not just don't have confidence to invest, and the demand is investment driven in EMS business. Given my current estimates, Scanfil is in a position that we cannot exclude possibility that they have to give a second profit warning this year, even if I'm already expecting relatively clear decline in sales and correspondingly in EBIT, but that's a risk that might still realize in the next weeks or months. Also in case of Scanfil, that the first profit warning was not enough.
Yeah, so still tough times ahead. And then finally, right now, what's the valuation like, and what's our recommendation on Scanfil?
Our case has remained intact since Q2 report. Scanfil's valuation multiples for this year are low, even if they would have to cut still the guidance. Also, DCF price is significantly above current target price. Thus, I remain positive with the share, and this is based mostly on low valuation and expected recovery in medium term.
And the recommendation is?
Accumulate.
Okay. Thank you, Antti. And you can find more about the company and the latest research at inderes.se.